Hello, everyone, and welcome to the South Stars live corporate webinar. This is David Vidala from RBMG. South Star is listed on the TSX Venture Exchange under the symbol STS and on the OTCQB under the symbol STSBF. Joining us today is the company's president and CEO, Richard Pierce, who will be giving an outlook on the global battery metals market, a brief overview of South Star's operations, a look into the recent earned-in agreement with a highly prospective Alabama graphite project, South Star's competitive advantage, and South Star's upcoming operational milestones. At the end of the presentation, we will open it up for questions for management to address. If you are interested in asking a question and are logged into the Zoom app or web platform, you can submit your questions to us directly in the question module. Please note this presentation is being recorded today, Tuesday, November 16th, and will soon be made available on the company's website. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now I'll hand it off to Richard. Richard, the stage is yours.
Thanks, David. A pleasure to be with you today and present South Star Battery Metals and principally the Santa Cruz Graphite Project in Brazil. I would like to start off by saying, this is not an exploration play. This is not a development play. This is truly a production play. Our goals are really to take this project, get it into production at the end of 2022 and scale from there. So this truly is a fundamental value play in what I believe to be one of the most premier battery metals jurisdictions anywhere in the world. Everybody's favorite slide. I'd like to start off with just a couple highlights and strong differentiators compared to many of the other companies that are out there. Number one, it's a truly experienced team that are mine builders and mine operators. We have decades of experience of taking projects from an idea, get them onto paper, through development, through construction and production. So we've done this a couple times. We've been involved in a variety of different metals. I've been personally involved with this project basically since 2010. In other operating units and within the group, we have mines that are in production. So this truly is something that we've done before. We're good at it, and we think that is a strong differentiator for us compared to many of the other ones out there. The other differentiator that I always like to point out is just how we're putting it into production. So we have a two-phased approach. Phase one is a 5,000 ton per year pilot plant, approximately $10 million CapEx. Phase two, the way it's conceived right now, is a 25,000 ton per year commercial plant, approximately $25 million CapEx. So all in, it's around a $35 million CapEx. I like this approach for a couple of reasons. One of the main ones is obviously risk management. It allows you for a very modest CapEx to get into production, work through the kinks, get to know your controls, your mineralizations, your recoveries much better. It allows you to get product into the marketplace and establish those all important commercial relationships that are key to being successful in the industrial metal space and develop those long-term commercial relationships in the form of take-or-pay operations. Then phase two becomes sized based on those arrangements and those take-or-pay offtake agreements. A lot of times I think what happens is the mining engineers and the geos go crazy on trying to maximize NPV and IRR and don't take into account the commercial side, how industrial metals actually works, et cetera. So we think this is a really smart way to allocate capital. It's a better way to kind of control your risks. Why don't more companies do this? I think, quite frankly, most of the companies don't do this because they're not profitable at smaller scale. Our phase one operations will be profitable from the get-go, and then we look to basically scale it up from there. So in terms of the project itself, our project is very similar to the other Brazilian projects that are out there. There's 4 producing mines in Brazil right now. They've been producing for 80 plus years. When you're strictly talking concentrate, which is more or less, can be anywhere between 90 to 97% graphitic carbon CG. For con, basically the larger the flake size and the higher the grade, the higher the pricing. And you have a second bucket of goods, which is kind of the value add component, which is purified graphite, which may be used in different battery applications, et cetera. That's a little bit different, but in general terms, our project is very consistent with the other Brazilian context. We are principally a large flake, high quality, project, which just means that our con will have better pricing. In terms of the geologic potential, we're really just scratching the surface. We've got 13 claims over 13,000 hectares. We're planning on just about 5% of the overall land package. We are planning an extensive exploration program this year and next year, looking to basically, put about 4,000 meters additional into the property and put out a new resource and reserve estimate. We have 10 to 15 drill-ready targets. We have a 7.5 kilometer long strike identified. The geophysics teams are getting ready to get mobilized here shortly, and then we'll follow that up with exploration and drilling program. And as far as the metallurgy and process, again, we've fully tested. We're not reinventing the wheel. Our process is very similar to the other Brazilian operations. We've done a 30-ton pilot plant operation. We produced just under a ton of samples. We've sent those around to dozens of different companies. We have 1 to 3 kilo samples that we can send around of different size, grain size fractions samples. So again, the metallurgy has been fully vetted and tested. Our results have been published. So we have resource, we have reserves, we have met work, we have CapEx, OpEx, everything is included in our PFS. So investors are able to kind of see what we're doing. We've also recently put out some fantastic results as it relates to advanced material testings, be that for the alkaline battery market or be that for the lithium ion battery space, et cetera. So we've built batteries, we've produced anode material, we've built lithium ion batteries, we've done long cycle testing, had great results. Our product in general is extremely pure. It's very consistent with the other Brazilian properties. It's very suitable for a broad range of sectors and markets. Just a little bit about the cap table. Get 99.5 million shares outstanding, about 156 million shares fully diluted. Insiders are extremely well aligned with shareholders. We have insiders own about 20% of the overall shares. Institutions own about 8%. We recently raised about $2.5 million, so we have about $4 million sitting in the bank right now. So we're well funded. Our cap table is pretty simple to understand. We're working our way towards some significant gains in the share price recently, but obviously our goals are really to take this project and scale it and unlock that value for shareholders. The corporate structure is really simple. STS owns 100% of the project. There is no debt and there's no royalties or streams currently on the project. Talk real briefly about the board and the management. Again, most of these folks I've worked with for a decade plus. Great capital markets experience, good operational experience, good Brazil experience. So many of these folks were involved with me on different projects. Probably the most notable is Luna Gold, that then turned into Trek Mining and eventually turned into Equinox Gold, which today is a $3 billion gold company here in Brazil, as well as in the US and other jurisdictions. So that's probably the most notable story that we've been involved with. In terms of the management team, again, most of us are based here in Brazil, except for IR and some finance. We've got most of our team based here. Just real briefly about myself. I've spent most of my professional career here in Brazil, but I come from Denver. I have degrees in economics and engineering. We moved to Brazil basically in 2008, and I've been here ever since. I'm based in Sao Paulo, 20 plus years in mineral resource projects and working throughout the Americas. So very experienced group of folks, and we truly are mine builders, mine operators, and mine financiers. Just briefly kind of walk through the project. Again, our phase 1 operations are 100% construction ready. We're fully licensed, fully permitted, ready to go into construction. Again, Brazil is an extremely friendly, mining friendly jurisdiction with 80 plus years of continuous production of graphite. Very simple, open pit mining operations. It's an oxide ore deposit. There really is no drilling or blasting involved. At surface mineralization, extremely low strip ratios, small footprint, et cetera. It's a simple, proven flow sheet that's really kind of based on 80 plus years of experience, with one important exception: there's no tailings dam. So for obvious reasons, with the issues that Brazil have had with tailings dam failures, et cetera, we made a decision a couple of years ago to basically use filtered tails where the water will be taken out of the traditional pulp tails, and then the filter cake will be co-disposed in with the waste rock dump. Again, we are ready for construction, fully licensed, permitted. We have excellent infrastructure, easy logistics, and again, a very experienced management team. Overall, the project has been basically de-risked except for execution risk. And again, that's where I think having a very experienced management team that has built and operated mines comes into play. So just a couple things here, it's phase construction. Again, as we mentioned, phase 1, phase 2, extremely low environmental risk. All of our waste materials have been tested. They're categorized as inert, non-dangerous material. We have no tailings dams, so permitting life has been very easy. We'll be in the first quartile of cost on the OpEx. So we competitive with the inevitable pricing cycles that happens throughout the commodity cycles. Extremely low capital intensity compared to a lot of these projects. We're fully capable of scaling. We have a huge geologic potential. This project can be as big as we want it to be, and as there's clients lining up to provide us with agreements for jurisdictions and companies that are looking to diversify supply chain away from such a heavy Asian dependency. Brazil has a lot of strong potential there. And again, I think in the general terms of things, it's a perfect spot for diversifying away supply chain risk. Just real briefly about infrastructure. And I don't know another project out there that has similar sorts of infrastructure advantages. We're 1.3 kilometers off a multi-lane paved federal highway. We have a graded gravel road straight to site. The power substation's a couple kilometers away. There's a gas pipeline a couple kilometers away. Water will be provided on site with wells. So infrastructure is really easy. This picture is interesting because you can actually kind of see there's maybe 60 centimeters of overburden, and then you're right into the mineralized zone. So it's easy mining. In terms of the logistics, Brazil, different than many of the other jurisdictions that are out there, has a large internal demand for graphite to the tune of about 80 or 90,000 tons per annum. We're an easy day's drive away from most of the major industrial centers, as well as being just a couple 100 kilometers away from the major port of Ilhéus, as well as one of the largest container ports in Latin America in Vitória. And I think another strong differentiator out there, which shouldn't be understated, really, is just the experienced workforce that is available here. Because Brazil has been operating for 80 plus years continuously, there's an unbelievable depth and breadth of experience, both on the technical side as well as on the commercial side. So again, with industrial metals, it's all about placing your material profitably and developing those commercial relationships. I know lots of Brazilian engineers and technical folks that have consulted on projects all around the world. So we tend to export talent for different projects, but we're fortunate enough to be in one of the major districts here and call on some very experienced folks that have been in the graphite space for 30, 40 years. Just talk briefly about ESG. And again, this is part of our corporate DNA because we have other operations in production. We understand how important this really is. It's not just lip service. It's our normal way of doing business. And it's really based on being very transparent, open, and engaging with the community. We'll try to pull the majority of our workforce from the community itself. We'll have about 60, 65 direct jobs, about 350 indirect jobs. It basically doubles for phase 2, the way it's conceived right now. We'll be working with the community, the municipality, local government to kind of train these folks and set up ongoing training opportunities, et cetera. We're very focused on worker safety. Our process is extremely benign. There's really nothing aggressive in terms of chemicals or things like that. And so we really focus on being a good partner and a good neighbor. And it's really based on methodology that we've developed over the previous 10, 15 years in operating functioning mines here in Brazil. This is the slide that kind of gets a lot of folks excited, and certainly gets me excited when I look at it every time. Basically, it kind of looks at the projected demand here over the next 10 years. And these kind of colors down here are, let's say, industrial applications. And then the red or rust color is basically looking at the EV space and the lithium-ion battery space. And if you think of graphite, think of it basically in two buckets. You got industrial metals, which is more or less growing at GDP. And then you have lithium ion battery space, as well as some others that are growing exponentially to the tune of about 20–25% compounded annual growth basis over year over year. So exciting times. Certainly, it's not just all about the lithium ion battery space. I think there's some fantastic opportunities out there in the alkaline battery space, in lead acid battery space, and other applications, communications, et cetera. But what this graph basically shows you is that 10 to 15 new mines have to come online between now and 2025. And that number has to basically double again by 2030. And in fact, the latest projections that I've seen on EVs and lithium ion battery demand, we're actually ahead of this curve for demand. So again, this pressure for additional supply is mounting. I think lithium has responded extremely well in terms of its pricing. And I think graphite is just getting ready to kind of do a similar pattern. But in general, a significant amount of production has to come online between now and 2025. And again, between 2030, that has to double. So we feel really good about having a fully permitted licensed mine that can then be scaled and place product into that market. And for my money, again, I think graphite is one of the best spots to be in the battery metal space. It's number one in terms of total percentage growth, and it's number two in terms of tonnages. So when you look out across the battery metal space on where there's value, on where there's demand, again, we feel very good about having high quality, proven assets in a producing jurisdiction that can be brought up quickly into a larger scale production. And I think graphite's a dynamite place to be. And obviously, I've been here for 14 plus years. I think Brazil is a premier battery metals jurisdiction. A couple graphics here showing that Brazil, basically, depending on whether Mozambique is producing or not producing, it's number two or number three in terms of graphite con produced consistently over the years. It's trailing really only China. Brazil itself is currently categorized as the third most important country for the EV supply chain, behind only China and Australia. Again, I think with 80 plus years of continuous production in graphite, it's an amazing spot to be. Brazil itself produces lithium, it produces manganese, it produces cobalt, nickel, et cetera. So it truly is a premier battery metals jurisdiction. And this is a graph I just recently found, and I thought it was fantastic. And what it basically shows is a margin curve for all the current mines plus projects. And what you see here, what caught my attention really was the top three most profitable operating mines, meaning that are already in production, already producing. All three of them are in Brazil. So if you look out across all the major jurisdictions, the three most profitable mines that are currently in production are located in Brazil. And again, I think that gives us a lot of comfort on having a scalable project in a known jurisdiction. It truly is a world-class flake deposit. Again, 65% of our ore body is classified as plus 80 mesh, meaning that it's a large flake or jumbo flake deposit. And this is talking a little bit about the flake size distribution throughout the deposit. We've sampled along the strike at different depths, et cetera. So we feel very comfortable. When we tested the 30 tons, we had very representative samples. So we have 1 to 3 kilo samples that we can send out to different folks. I'm happy to do that on request. But in general, again, when you're talking con, the larger the flake size and the higher the grade, the better the pricing. Talk a little bit about resource estimates. Again, it's a sedimentary deposit, disseminated ore body. The mineralized zones can vary between 40 to 200 meters wide. Structural controls. You have a 7.5 kilometer strike that's been identified. We've explored part of it. The host rocks are really nice and paragneiss with quartzite intercalations. It's a very similar geologic context to all the other Brazilian operating facilities. We've got 15 million tons at 2.3% CG, 9,000 plus meters of drilling into the ore body. Some of the holes are 100 plus meters deep. We have holes that actually stop the mineralization and they just didn't have any more rods. So It's extremely prospective and very open, both at depth as well as along strike. Most of that resource converted, so we have 12.3 million tons of reserves, 2.4. Our first year's mining will be done at about 3.2 or 3.3% CG. Again, very consistent with the Brazilian context. Extremely robust financial metrics, $81 million NPV5, 35% IRR. Payback period is 4 years from the start of construction, so 3 years from the start of production. Very simple open pit mining, a very proven milling flotation circuit, got a 12-year mine life. We're basically looking at $400 OPEX for the life of mine, and we're currently modeling a $12.85 basket price for our sales. This truly is a deep value play. If you look at any metric for valuation, be it enterprise value as a ton of CG, enterprise value as a percent of NPV, et cetera, SouthStar is extremely undervalued when compared to our peer group, especially when you consider that we're getting ready to put it in production and get that re-rate really from a development project to a producing asset. Extremely low CapEx and capital intensity, will be in the first quartile of OPEX. These graphs are interesting because I think it helps compare. There's one caveat here. A lot of these projects are supersized. If you look around the world at the average size of operating units, it's about 30,000 tons of con per year. So you've got a lot of these supersized projects, which to date really haven't produced any profit for shareholders. And it's hard to deliver on these tech specs. So I think in general terms, I think what you see is, if it's not broken, don't try to fix it. So we're looking to kind of reproduce what's been successful, have a very diversified client base, and be able to diversify our sales into a variety of different sectors and industries. I like this graph a lot because it basically kind of shows you CapEx versus IRR. And what you see are really a bunch of projects in various stages that are kind of lumped around a 20% IRR, but CapEx is 100, 200, 300 million dollars. Many of these mines are in, places that don't have much infrastructure, may be frozen 3 or 4 months out of the year, et cetera. At current pricing, a lot of these projects really are unfinanceable. And on the flip side, I think it highlights the value that SouthStar brings to the sector as well as to potential investors. And this is a graph that kind of says the same thing, but maybe in a different way. So it compares market cap to different study phases. And again, we're in here twice because our phase 1 is through detailed design. And then we put out a PFS, which has phase 1 and phase 2. But what you see are bunches of projects that with a technical report that maybe have a resource or maybe don't. Not much data there for investors to be able to evaluate really if it's a good investment or not, all the way through to folks that have published a feasibility study. So in our case, we're through detailed design, ready for construction for phase 1. And we basically have a PFS published for phase 1 and phase 2 that's ultimately scalable. So I think it's a fantastic opportunity for investors to get in on a project that's ultimately scalable and getting ready to go into production. So I think we have a unique opportunity. We have a very experienced team that truly are mine builders and operators, very experienced in Latin America and certainly Brazil. The project itself is extremely robust. It's high quality in a producing jurisdiction where we have really unbelievable access to infrastructure, logistics, et cetera. It will be first quartile of OPEX, extremely low capital intensity. Brazil is an obvious jurisdiction. It's very mining friendly. We have great infrastructure, great logistics. We'll be able to place material into both Europe as well as North America for significant advantages over, say, an Asian supply, just because of logistic aspects of it. And on top of that, there's an extremely large internal demand for graphite concentrate, which we're able to take advantage of. In terms of timing, I can't think of a better time really to be involved in battery metals. It's a fantastic time to have a fully licensed, permitted graphite project that's scalable. We're in an enviable position to be able to put something into production at the right time. There's new markets being developed continually. including graphene and others. And again, I think overall the management team is extremely well aligned with shareholders, decades of experience in Brazil. And that's really the presentation. So I'd like to kind of turn it over and we can go through questions.
All right, thank you, Richard. If you're interested in asking a question and are logged into the Zoom app or web platform, you could submit your question to us directly in the question module or the chat module. While we're waiting for that, we have some questions that were previously submitted, and I'll start with those. Richard, you ready?
Ready.
All right. How do you see SouthStar fitting into the needs of the green energy sector?
Yeah, there's a lot of interest out there really in energy transition, green energy, storage, et cetera. So I think we're in a very enviable position where we're able to place product profitably into lithium-ion battery storage, et cetera, as well as place material profitably into industrial applications, lithium-ion or alkaline battery applications, other high-end applications. So we're really focused on margin and creating value for our clients. And we believe that long-term that creates value for ourselves and for our shareholders. So there's lots of information out there. For example, I think what many companies don't say is that, it can take 18, 24, even up to 30 months, depending on the application for you to qualify your material. So say, for example, if you want to place your material with a Tesla, Ford, Volkswagen, et cetera, it's a process. So you start off with, a couple kilos, then they'll ask you for a ton, 5 ton, 10 tons, 20 tons. And they'll eventually work through a gated process where over time they will approve your goods. And at that point, they may be willing to sign a take or pay offtake agreement. But it's not like you turn the mine on and suddenly you can start placing your material in those markets. So you need to be profitable from day one. So we basically set up a commercial plan for 0 to 18 months, where we'll be traditionally selling into industrial applications. It could be high strength steels, refractories, lubricants, et cetera, as well as producing. What we're going to do is basically send 300-400 tons overseas to a toll mill. We'll upgrade that material. We'll turn that into a variety of products, including conductivity enhancement materials, SPG for lithium-ion battery space, et cetera, and be able to start that qualification period. But you have to sell goods right off the bat. So we like our approach. It allows us to get our product into the market, qualify it, and scale up from there. So I think that the green energy sector, clean tech is a fantastic place to be. Our product is very suitable for those applications as well as many others. If you look out across the graphite producers that have been successful, they're never dependent just on one space. They're diversified across sectors and across clients. And that's really kind of what we want to replicate as well. We'll be heavily investing in R&D, upgrading material, et cetera. But we'll also be looking to really be focused on margin, and where we can find margin, we'll place material.
Great, thank you. With the recent earn-in agreement for the Alabama project, how does SouthStar anticipate prioritizing its time between its Brazil project and the new Alabama project?
Yeah, that's a great question. I've had that asked a couple of times. Bar none, our flagship project is Brazil. Our total focus is really on putting that project into production and then scaling from there. We looked at the Alabama project as really an opportunity. It's a great group of partners that we have there, but it's a project that'll be really the next project in the pipeline. And it's interesting from the standpoint of diversifying jurisdictions, sectors, et cetera. I think there is a lot of interest in North America. So we will be advancing the project, but we don't want to get distracted. We'll have another team that's really kind of focusing on that project and moving it forward. I continue to be based in Brazil, and we're really focused on getting this into cash flow, getting it built, getting it in commercial production, and then scaling from there. There's on the flip side, there's a lot of synergies there. So I think in general, it's a very similar geologic context to our own. It's a complementary ore body in the sense that Brazil is 2/3 large flake, 1/3 finer materials. The large flake can be value added, can be turned into value add goods, basically in expandable, fire retardants, things like that, as well as refractories. Very, very fantastic opportunities there. And the fines then can be upgraded to other applications, including SPG for lithium ion batteries. The Alabama project is the flip side of that. So it's about 2/3 fines and about 1/3 larger flake material. So they're complementary projects. We think that we can probably take 2 or 3 containers full of material, run that through our pilot plant, and permit and license that project fairly quickly and get it into production. Next thing there is to really kind of look at those synergies. It's the same conversation, right? Our commercial folks are going to be talking to the same group of clients that are looking for product, be it in North America, be it in Europe, or be it in Asia. So very complementary ore deposits, very similar geologic context, but we are very focused on Brazil and getting that into production, and that's probably the best way that we can be value accretive for clients and shareholders.
Great, thank you. Is there any seasonality at either of your projects?
Well, Brazil is more or less a tropical climate. Again, our seasons here, our lows are kind of 12 degrees and our highs are 30, 32 degrees Celsius. So again, we don't have winter, we don't freeze. We have a dry season that lasts about 9 months, 10 months, depending on the year, and a rainy season. So our only seasonality is really a reflection of rain or non-rain. Again, Alabama being where it is, there's not really hard freezes or anything like that would impact production or advancing exploration and development. So in general, no, there's no seasonality other than the obvious wet and dry seasons for Brazil. And our goals are really to mine ahead of what we need, and we'll likely shut the mine down for the rainy season. We've operated many mines in very wet environments where the rainy season is much longer. It's not that we can't do it. It's just that it's maybe not as cost efficient. So we'll likely shut down the mine. Certainly for phase 1, we'll only operate in the dry season. We won't be operating in the rainy season for the mine itself, but the production will be ongoing as we have a stockpile of ore that we can work our way through.
Sure, makes sense. What numbers should I use to calculate profits for the company? How do I determine the market price for graphite, and what is the all-in sustainable cost of production similarly used in the gold mining industry?
Yeah, again, good question. I applaud anybody who actually wants to put together a cash flow. I think it's important that investors look out across projects and really evaluate whether something's going to produce money or not going to produce money. So if you look through our PFS, all the numbers you need are in there. On our website, we always are updating our presentations. We have our corporate presentation as well as our battery metals primer. And in the back of that primer, here I can actually show you. This is the primer that's available on our website for download. And if you actually look at our last page here, we update it about every month. This is the actual pricing for benchmark graphite con, as well as some upgraded products here. So there's lots of sources and things like that, but there's pricing out there. In terms of all-in sustaining capital, again, that's, for those who don't know, that's kind of a gold mining standard on being able to compare apples to apples. So it includes all the operational cost plus sustaining capital and G&A. So in our PFS, everything has been laid out. I think there's actually a table with the cash flow in there. So if somebody were interested, they could just look through the PFS and kind of look at the numbers, set something up in an Excel spreadsheet, and our cost, our appendix will update that every so often. And there's lots of data out there for graphite costing. An interesting thing on that is the graphite pricing went up 10% in October. So, I think we're finally getting to a point where there's an increasing pressure on graphite con and value add goods, similar to what's happening in the lithium space.
Great. Thank you. Can you envision anything that would reduce the use of graphite in batteries?
Yeah, I mean, the battery space is unbelievably dynamic, and everybody's coming out with the latest and greatest technology. But what you always find is in a battery, you got four things. You got an anode, you got a cathode, you got basically the separator and electrolyte. So you can't really get away from that, and there may be some deviation on what the materials are in each one of those. But at the end of the day, I don't see anything in the near term to midterm that is going to separate, is going to eliminate graphite. I think what you see certainly in the anode space is a move towards a blend of either synthetic graphite with natural graphite. The anode currently in most battery applications it's almost all graphite. I think what you see is, folks looking to blend synthetic and natural, or possibly blend graphite with silicon. So, it seems like currently there's a trend moving in that, but regardless, even fuel cells require graphite in the application. So again, we look to create value for clients. We'll be in the battery metal space across different sectors, be it lead acid, be it alkaline, be it lithium ion, electronic applications, communications, et cetera. So we see nothing but blue sky ahead of us, nothing that's going to really impact us in any way, shape, or form. And I'm seeing more opportunities than really we know what to do with. So it's really a question of figuring out how we create value for clients, working with them to develop a spec material that they're willing to buy, next year, 5 years from now, 10 years from now, and get a relationship established.
Great. This is a good segue. Has management considered the option of partnering or creating a joint venture with a tech company that has the know-how and ambition to produce silicon graphite composite anode materials? And if so, can you elaborate on that? Or is SouthStar just a pure play graphite mining company?
Yeah, I mean, we changed our name to Battery Metals Core, right? So that we can, our goals are truly to be a multi-jurisdictional producing company. So we want assets across, a couple of jurisdictions. Obviously, we have some significant advantages in the graphite sector. Our roots are our roots, and we're going to build on those and really have a strong foundation. We'll be very selective in looking at other alternatives. We're always looking. I've looked at silica deposits. There's nothing too mysterious there about them. It really gets down to a question of logistics more than anything else. We've looked at manganese, we've looked at vanadium, we've looked at lithium, et cetera. We've looked at potential partnerships and things like that. We're obviously looking for the right opportunity that's value accretive, and we'll certainly keep investors abreast of anything that develops.
All right, makes sense. Can you describe graphite product quality and purity? Since flake size has often been associated with price, even if flakes are large, are these flakes durable and not subject to splitting or fracturing?
Somebody's been doing some reading, I think. So again, when you think about graphite, think about it in two buckets. You've got industrial applications, and then you've got the value add applications. For the most part, again, there's always exceptions. The industrial applications are looking for, let's say, 80% to 96, 97% CG. And it could be fines, it could be mid-size fraction, it could be large fraction, depending on the application. For most of those industrial applications, it's really about being able to meet the tech spec that client wants. So you're screening things like that, trying to make sure that the client's happy with the product. And then when you start moving into the value add component, which is taking 97 or 95, 97% con and taking it up to something higher than that, 98, 99. We've tested both with chemical processes as well as with thermal processes, and we've taken our concentrate up to 99.393, so 99.9993% purity. What we found is that for the most part, We don't have a lot of deleterious material intercalated between the layers, so we're able to kind of purify fairly simply without a lot of complicating factors. The last thing you want to do is have a large flake deposit and then have to pulverize it down to get the contaminants out. So the deposit itself is extremely pure. We've been able to upgrade it to extremely high quality material. We're one of 3 or 4 companies currently that have material placed in a lab in the US, the Oak Ridge lab, for testing for nuclear applications, the pebble bed reactors. So again, we've proven that our product is extremely clean, extremely pure with low levels of contaminants. We have an unbelievable breadth and depth of applications that we can sell material into. So we feel that we have a very unique opportunity for placing material at strong margins. And we feel like we have a very experienced management team that's able to deliver on that. So overall, because Brazil has been producing very high quality product, the markets understand Brazilian graphite. They're looking for more Brazilian graphite. And I think we can leverage that to scale this thing up really quickly. So our product has been tested across a variety of applications. And we've put those results out there, both from a purified micronized standpoint. We can sell into alkaline batteries, we can sell into lead acid batteries, we can sell into conductivity enhancement materials, we can sell into the lithium ion battery space for electronics as well as EVs. We've tested for dispersion, and we will be putting those results out fairly quickly. But for the most part, we feel like we have a fantastic opportunity to have a very broad, diversified portfolio of products that allows us to sell into very high margin sectors and industries in general.
What competitive advantages do you claim to have over other near-term graphite producers? For example, Next Source in Madagascar.
Sure. Again, this is another question that I think we get a lot, and I think this is an important question for investors, right? Because there's a lot of projects. We keep about 50 projects in our database. We're constantly trying to keep abreast of everything that's happening. It's an exciting sector. It's an exciting time, and fantastic opportunities for us. I think in general, kind of what we walk through here is really the advantages. We have a fantastic project with very high quality product in a fantastic jurisdiction that's been producing graphite for 80+ years. We have an extremely experienced management team that can deliver on those goals and metrics. And we have really an unprecedented time to be, to have a fully permitted licensed project that's scalable. And we look to put this into production as quickly as possible and scale from there. So I think when you look out across the demand, 10 to 15 new mines have to come online to have a shot at meeting that demand curve. So it's not like, oh, I have to bet on one, but at the end of the day, we feel like we can be very competitive. First quartile of OpEx will be profitable throughout, let's say, the inevitable commodity cycles. We're competitive with Chinese production. I think a lot of these projects are going to struggle with that because they may be hard rock, they may be frozen, they may be in the middle of nowhere. Logistics are difficult. It's going to be diesel power that's providing energy. Suspect port facilities. Islands that get shut down for COVID and aren't producing, et cetera. So I think there's a lot of opportunities out there. I just feel like I personally don't know another project that has the same advantage that we have, and a team in place that can deliver on those goals and value for clients as well as shareholders.
So how do you explain Southstar keeping their CapEx so low compared to other projects?
Sure, and I think when you look out across the space, I think what you see are a lot of projects that have to put a lot of money into infrastructure, be it roads, energy, water, et cetera. So when you look out across that, I think what you see are projects that are only profitable at a huge scale. And so you see their CapEx, there's a project in Mozambique that turned $130 million CapEx into $300 million CapEx. Last time I checked, they've lost about $300 million over the previous 2.5 years operations, and they've never been profitable. So I think you have these supersized projects that have shown themselves not to be profitable. And economically, the only way that they could show mathematically that they were profitable was to create this mega project. And I think the benefit that we have here is a clear understanding of how the industrial metals and certainly the graphite markets work, the importance of having product to qualify as well as be profitable from day one. We're profitable on phase one, and we're even more profitable on phase two. So I think when you look out across the space, lots of money is spent on infrastructure. Lots of money is spent on hard rock deposits where you have to put more energy and cost into, crushing, grinding, et cetera. And if you can't be near the first quartile of cost, I think you're always going to be struggling to be profitable, because the competition out of Asia is fierce. So when we looked at it, we wanted to go into it in a way that was risk adverse, recognizing the real limitations in the marketplace, but at the same time, the opportunities that exist. So we did a lot of research. Like I mentioned, we've got folks that have been in this for 30, 40 years, and we feel like we have a recipe for success and ultimately can scale this thing larger, so that if somebody comes along and wants more, we'd be happy to build additional capacity in our plant, but only if there's a take or pay sort of agreement in place, and we'll scale this thing as required. But we look to allocate capital intelligently, so that we're not allocating capital to be unprofitable and ultimately hurt shareholders.
Great answer. Can you reiterate the next steps on project financing and commencement of production?
Sure. So again, we're looking to basically, again, this is in our presentation that's available for download. Here's basically our macro schedule. We're looking to basically get our financing wrapped up here in the next 3 to 4 weeks. We'll put in the down payments on most of the major equipment, get those prices locked in, get the contractor mobilized. We have a 12-month construction and commissioning schedule, and look to have basic commercial production for phase one started Q4 of 2022.
Okay. All right. Well, we have time for just one more question. What obstacles do you foresee may delay your planned Q4 2022 production?
I don't see anything that's going to delay us significantly. I think the biggest thing that we're seeing right now really is supply chain disruption, and across the board, be it steels, cement, et cetera. There's obviously supply chain issues. For the most part, I think nothing should delay us, but we're keeping a very close eye on that. That's one of the reasons why we want to put our down payments as quickly as possible, so we can lock our prices in, and then just keep our foot, let's say the pedal to the metal, so that we're constantly the squeaky wheel that is driving folks to be on time and on budget. So again, I think having a very experienced management team that's built projects from small projects like this all the way up to 250, 300, $400 million CapEx programs. We know the usual things that kind of drag things down, and are very aware of how to deal with them and kind of keep things moving forward. The biggest thing we have right now is really supply chain. Because we have other things that are in production, we really haven't, in our other operations, we weren't significantly impacted by COVID. We were able to put in place a series of protocols, tests, et cetera, that we had no disruption really whatsoever in terms of production. Costs went up a little bit, obviously, because, for example, we had to hire extra buses so that we had a little bit more adequate social distancing on the buses, some extra cleaning crews, et cetera, things like that. But we successfully navigated our way through those things, and very blessed and fortunate that nobody was significantly lost time to COVID and things like that. And at the same time, we didn't lose any production or have capacity cut because of those things. So we've been able to kind of work our way through challenging times and challenging conditions, certainly, but for the most part, on time, on budget is our mantra.
Well, that's great. Thank you, Richard. And thank you everyone for joining today's webinar. Today's webinar recording will soon be made available on Southstar's website. If you have any additional questions that have not been addressed on this webinar, please feel free to email us at southstar@rbmilestone.com. Again, that's southstar@rbmilestone.com. Thanks again, and you are now free to disconnect.
Appreciate it. Thank you.